You ever think about, like, the stuff behind the stuff? The hidden things that make our world tick?
Yeah, the things we take for granted in phones, buildings, you name it.
Exactly. Well, today we're kind of digging into one of those critical minerals, and we found a real dark horse, actually. Niobium.
Niobium, okay. Not exactly a household name.
Right. But it turns out it's super important. Pivotal, even for clean energy, defense tech, all that infrastructure stuff. We found some surprising things.
It's interesting how it's moving, from being this sort of niche metal to something, well, something central.
Hmm.
It's already key in making steel stronger but lighter, aerospace alloys too. And as we push those areas, well, the need for niobium just grows.
Which is exactly why we're doing this deep dive. We were looking at this article, and it really flagged a potential weakness, a big one. North America is almost totally reliant on getting niobium from elsewhere.
Okay.
Dependency.
Yeah. But get this. There are these two junior companies trying to step up, trying to, like, change the whole map for critical metals here.
Interesting. So who are they?
Okay, so first, there's NioCorp Developments. Ticker is NIOBF in the U.S., market cap around $106 million when this article came out.
NioCorp. Got it. And they're U.S.-based.
Yep, project in Nebraska. Elk Creek. And they're not just going for niobium. They want scandium, titanium,
Yeah.
maybe even rare earths. Ambitious.
Wow. Okay. A multi-mineral play.
Yes.
That's ambitious.
And then the other one up in Canada is Nio Strategic Metals,
Mm-hmm.
ticker NIOCF. Much smaller, market cap was around $3 million.
3 million. Okay. Tiny compared to NioCorp.
Totally different scale. And their plan is different, too. They want to restart an old niobium project in Quebec.
Okay.
It used to operate.
Okay. Okay. So a brownfield site, that has its own pros and cons.
Right. So two companies, two very different strategies aiming at the same critical problem.
And the big question is, can either of them actually make it work? Especially when Brazil controls almost everything right now.
Over 90%, yeah.
Yeah.
So any North American production would be huge.
Definitely a game changer.
Okay, so let's break down why niobium is suddenly such a big deal. The article we looked at had these projections from Mortar Intelligence.
Ah, yes. The market forecasts. What do they say?
Pretty dramatic growth. They see the market going from about 117 kilotons in 2025
Okay.
to almost 188 kilotons by 2030. That's a growth rate of nearly 10% a year. Compound annual growth.
Wow. Okay. That's significant. Nearly 10% CAGR is nothing to sneeze at. What's driving that?
Well, it's traditional stuff like advanced steel. Niobium makes it stronger, lighter, still a big driver.
Right. The HSLA steels, high strength, low alloy. Niobium's a key ingredient there.
But also aerospace, you mentioned that. High-performance alloys needing niobium's heat resistance.
Yeah.
And electronics, too, apparently.
And the clean energy angle must be huge now, right?
Oh, absolutely. EVs, wind turbines, they need niobium for, like, specialized magnets or just making parts lighter and more efficient. The demand's coming from everywhere.
Makes sense. But that supply situation you mentioned, that's the kicker.
Totally. Brazil, over 90% of global production. It's almost a monopoly.
And the U.S. importing everything.
100%. The article really stressed that. For a major economy, importing 100% of a critical material, that's a serious strategic vulnerability.
Yeah, you put it like that. It's stark. Relying on one main source, essentially one country, for something so foundational.
It's not just a business issue then, is it? The article frames it as like geopolitical, industrial independence, national security even.
Exactly. Having that domestic supply chain for critical minerals like niobium, it's becoming less of a nice to have and more of a need to have.
Right. Reduces reliance on others, bolsters your own industries, makes perfect sense.
It's about resilience, fundamentally, economic and security resilience.
Okay, so let's look closer at NioCorp, the U.S. contender in Nebraska. The article mentions something big on the funding side.
Yeah, this is pretty significant. They got what's called a preliminary expression of interest, basically a signal of potential funding, for up to $200 million. And it's from UK Export Finance, UCAF, announced back in May.
$200 million from the UK.
Yeah.
That sounds promising.
It is promising. It shows serious international interest. But, and this is a big, but it's preliminary, non-binding.
Ah, okay, non-binding. So not cash in the bank yet, more like we're interested
Well,
that...
exactly. It's a strong signal, but it comes with conditions, strings attached.
What kind of strings?
Well, the main one seems to be that NioCorp needs to lock in agreements with UK customers, offtake agreements. People in the UK have to commit to buying the niobium.
I see. So they need buyers lined up before the money flows. Makes sense.
And the article also mentioned they're talking to others too, XEM, the U.S. Export-Import Bank, and a German loan program. So they're casting a wide net for funding.
Spreading the risk, maybe.
Mhm.
Good strategy. And NioCorp's not just about niobium, right? You mentioned this trifecta.
Right, that's a key part of their pitch. Elk Creek isn't just a niobium project. It's aiming to produce niobium, scandium, and titanium.
All critical minerals, according to the U.S. government.
All three. And that's pretty rare for one project, especially one this far along. It really boosts its strategic importance.
So what's the big deal about scandium and titanium? We know titanium, aerospace, defense, but scandium.
Scandium's interesting. It's used to make aluminum alloys much stronger and lighter. Think aerospace again. Lighter planes mean better fuel efficiency.
Gotcha.
And titanium, well, yeah, aerospace, defense, medical, it's a workhorse.
Yeah.
So NioCorp is positioning Elk Creek to help secure supply chains for all three, potentially impacting aerospace, defense, and green tech.
Okay, that sounds like a major plus. But building something like this can't be easy or cheap. The article mentioned challenges.
Oh, definitely. The biggest one is just the sheer cost, the capital expenditure or CapEx.
How much are we talking?
The article mentioned over $1 billion total. B with a B.
Wow. Okay. Yeah, that's a mountain to climb for a company their size.
Absolutely. Raising over $1 billion is a massive undertaking, especially in the mining sector for a development stage company.
And that UCF interest, even though it's $200 million, it's still non-binding, tied to getting those UK customers.
Yeah.
Adds risk, right?
Adds layers of complexity, for sure. You're not just raising money, you're coordinating offtake agreements simultaneously.
Right.
And the article pointed out the financing will likely involve multiple parties, UCF, maybe XM, maybe others. Coordinating all that, all the due diligence, it takes time. It's complicated.
So even though they've done feasibility studies, got permits, production isn't exactly around the corner.
No. The bottom line is, without closing that major financing package soon, actual production is still years away. The groundwork is done, but the funding unlocks the construction.
Okay. A lot riding on that financing then. Let's switch gears to Canada. Nio Strategic Metals and the OCO project in Quebec, their situation sounds quite different.
Very different. One interesting development for them was cleaning up their balance sheet. They did a debt conversion deal back in May.
Debt conversion, how did that work?
Basically, they swapped debt and also some money owed to directors for shares in the company. About 11 million shares at 0.045 each. The result, according to the article, is they're now pretty much debt-free. Wipe the slate clean on long-term debt.
Huh. That's actually pretty significant for a small company, right?
Yeah.
Gives them a fresh start.
Exactly. A cleaner balance sheet makes it much easier to potentially attract new investment for the project. It's like hitting reset, financially speaking.
And the OCO project itself, you called it a brownfield site. It has a history.
Yeah, that's its main advantage, potentially. It was actually a niobium mine before, operated by Teck, which is a major mining company.
Oh, Tech operated, okay.
So there's existing infrastructure, maybe some legacy permits, past development work. That could mean a faster, cheaper path to restarting production compared to building everything from scratch, like NioCorp has to.
Right, less upfront costs maybe?
Mm-hmm.
Potentially quicker timelines if some permits are still good.
That's the hope with brownfield projects. The article doesn't give cost numbers for Okaba, but generally, yeah, leveraging existing assets can significantly cut initial capital needs.
Makes sense. But like NioCorp, Nio Strategic must have its own hurdles too. The article mentions some.
For sure. The biggest thing is that it's still very early days for this potential restart.
Meaning?
Meaning there's no current feasibility study, no updated technical reports mentioned in the article. They still need to do a lot of work to prove it's actually economic to restart the mine with today's technology and costs.
So they need to reassess everything. What's there, how to get it, if it makes financial sense now.
Precisely. That technical and economic validation is crucial, and it hasn't been done yet, or at least not publicly updated.
And the article also said something about limited news, low visibility. Why is that a problem?
Well, in the junior mining world, you need to keep investors engaged. You need buzz. If there's not much news flow, it's hard to attract attention, hard to keep the market interested.
Right. Affects the stock, affects fundraising ability.
Exactly. It's tough to build momentum without regular updates and progress reports.
Okay. Another point was high insider ownership.
Okay.
Around 46%. Is that good or bad?
Well, it's a double-edged sword sometimes.
Also.
On one hand, high insider ownership means management has skin in the game. Their interests are aligned with shareholders. That's usually seen as positive.
Okay, makes sense.
But on the other hand, if insiders own almost half the company, it means fewer shares are available for trading publicly. Lower liquidity.
Harder to buy or sell large amounts without moving the price.
Right. And some bigger institutional investors might shy away from that, maybe due to governance concerns or just the practical difficulty of trading.
Gotcha. And lastly, financing. The article suggested they'd probably rely on selling more shares. Equity financing.
Yeah, that's the typical route for junior explorers without revenue.
Is that tough right now
Yeah.
for mining juniors?
It can be very tough. Equity financing means issuing new shares, which dilutes existing shareholders. And in a challenging market, investors can be cautious, demanding better terms, or just staying away. Raising capital through equity is often difficult for small resource companies.
Okay, so stepping back. Wow. Two really different situations here, aiming for the same goal. North American niobium.
Totally. You've got NioCorp, big project, multiple minerals, further along in development, got that UCF interest.
Yeah.
But facing this massive, billion-dollar funding hurdle.
Right. And then Nio Strategic, much smaller, cleaner balance sheet now, potential advantages of restarting an old mine, but way earlier stage, needing to prove the whole thing works economically, and facing the usual junior financing challenges.
It's a great contrast. NioCorp's strength is the advanced stage and multi-mineral potential, but the weakness is the huge capital need and financing complexity.
And Nio Strategic's strength is the debt-free status and brownfield potential. But the weakness is the early stage, lack of recent studies and visibility issues.
Yeah, and the article really leaves you wondering, which approach gets there first? Or maybe neither. Where's the real path forward for North American niobium?
Fascinating.
Driven by this undeniable urgency to secure supply.
So, wrapping this up, we've seen how critical niobium is becoming, right, for so many industries.
Yep. Demand is clearly rising.
And we've seen how vulnerable North America is, importing 100%, mainly from Brazil.
A precarious position, definitely.
And we've looked at these two companies, NioCorp in the U.S., Nio Strategic in Canada, taking really different paths to try and solve that problem, each with unique strengths, but also significant challenges.
The growing demand meeting that concentrated supply, it really highlights why this is so important. These companies offer two potential solutions, two very different bets.
Which leads us to a final thought, maybe for you, the listener, to chew on. You've got these two companies at totally different points, right? NioCorp needs that huge funding. Nio Strategic is still proving its concept.
Yeah.
What factors, what do you think will ultimately decide who wins? Or if someone else entirely steps in?
Yeah, what's the key variable? Is it the financing, the geology, the speed of permitting, management execution?
And thinking bigger. What does this whole situation tell us about the future? About how we secure these critical minerals globally? What are the lessons here for other essential materials?
Definitely food for thought. The whole critical minerals landscape is shifting, and cases like this really show you the complexities involved, something to keep an eye on.